Hey everyone, welcome back. So, the Taiwanese stock market was, well, it was a real head scratcher today. Let's jump right in and deconstruct this thing, because it was definitely a wild ride.
Okay, so here's the big puzzle we're trying to solve today. You've got U.S. tech stocks taking a massive hit overnight. Then, our own market champion, TSMC, gets pummeled by foreign selling and closes down. So you'd expect the whole market to be bleeding red, right? But nope. The TAIEX actually clawed its way back from a 200-point drop to finish in the green. So what in the world is going on? And who was the secret MVP that carried the entire team today?
To get to the bottom of this, we've got to look beyond that one big confusing index number. We need to peek under the hood and see what was really happening. It's time to figure out who today's market MVP was and, who is just warming the bench.
Really, what we saw today was a massive game of musical chairs with investors' money. Capital was just flying out of some sectors and piling into others. This created a totally split market. I mean, some investors were probably celebrating big time, while others got stuck living in the penthouse suite. That's our slang for buying a stock right at its absolute peak, just before it crashes. You hate to see it.
And just look at this divide. It's night and day. The winners, it was all about the future, man. Low-orbit satellites, totally juiced by the SpaceX and AI hype, sent stocks like Shengdake and Watan into orbit. The huge demand for AI also lifted ABF substrates. That's the high-tech packaging for those super advanced chips, which powered up Kinsys and Unimicron. It even helped out Taiwan Glass, which makes specialty materials for AI servers. On the flip side, though, the losers were getting hit by some cold, hard fundamentals. TSMC was fighting off heavy selling, the construction sector is feeling the pain from slow sales, and shipping is just struggling with weak profits globally.
Of course, Taiwan's market doesn't live in a bubble. We were getting pulled in completely opposite directions by these huge global forces. So the question is, were we facing a nice tailwind pushing us forward or a nasty headwind holding us back? Well, the answer seems to be a little bit of both.
And this slide really lays out those conflicting signals. There's a definite headwind coming from that U.S. tech sell-off, which puts pressure on our entire semiconductor industry. Then you've got this cloud of uncertainty from China's slowing economy. But then you look over at South Korea. Their market is absolutely on fire, hitting new highs, creating this big wave of optimism in Asia. The billion-dollar question, though, is this. Is that a healthy rally we can all jump on, or is it a dangerous bubble that's about to pop and take us all down with it?
So with all this confusion, it's no surprise that the experts are totally divided. We're going to look at two top analysts right now who have completely different takes on this market, which means they're handing investors two very, very different playbooks.
So in one corner, you've got the bull, Du Jinlong. He's saying this bull market still has plenty of room to run, and that these dips are an amazing chance for some Pengyi, bargain hunting. He thinks strong company earnings could push the TAIEX all the way to 39,000. But in the other corner, you have the bear, Gul Jaerong. He's waving a huge red flag warning that the market is dangerously high, and a 4,000-point drop wouldn't be surprising. He thinks the days of just buying anything and watching it go up are over, and he's advising everyone to cut their holdings by half before the holiday. Wow.
A bull versus a bear, two totally different worlds. So what on earth does this mean for your money? Let's try to put together a practical battle plan, and we'll break it down by how long you plan to invest.
Okay, you've heard both sides of the argument. One expert sees a golden opportunity, the other sees a dangerous trap. So now we get to the most important part. How do you write your own script for what to do tomorrow and for the weeks ahead?
All right, here's a way to think about it. For the short term, maybe you play a little of both sides. Listen to the bull and buy the dip on sectors that are showing strength, like memory. But also, listen to the bear and take some money off the table before the holiday. For the medium term, it's all about focusing on those clear growth stories. AI, satellites, advanced materials. But you've got to be disciplined. If a stock breaks a key support level, you sell. And for the long term, think like a bull. You want to find those family heirloom stocks, the ones with a really strong competitive advantage, like a Delta Electronics, and stay away from sectors with a shaky future, like construction and shipping.
I want to leave you with a little dose of optimism from our bull, Du Jinlong. He said, "This year is the year of the golden horse. Everyone has a chance to see their assets multiply." It's just a great reminder that even when the market feels chaotic, there are still some incredible opportunities out there if you have a smart plan. So, as we head into the Lunar New Year break, the big question for you is, which camp are you in? Are you out there hunting for bargains, or are you playing it safe and cashing in some of your winnings?
Let that be your guide. Thanks so much for tuning into this breakdown, and we'll catch you next time.